Gold is opening the new week at its highest level in 3 months. Bitcoin's price is approaching the landmark level of $70,000. The US dollar opened today just shy over its 2-month high, but it's poised for further growth. Given that just like that Friday, the macroeconomic calendar is almost empty for the next few days, geopolitical factors will remain the main market catalysts. And judging by the news and announcements, we can expect an abundance of such factors, while Bitcoin and gold are primarily rising on fears that the situation in the Middle East could escalate at any moment. The currency market is increasingly shifting its focus to the US presidential election. The election will take place in just 2 weeks, and public opinion polls are increasingly leaning in favor of Donald Trump. If he wins on November 5th, the US could see significant changes in tariff and tax policies. This will force the Fed Reserve to maintain high interest rates in the United States, allowing the greenback to put pressure on its major rival currencies. Commonly, markets price in future asset growth in advance. Today, the US dollar index is trading higher within the daily range of 103.40 to 103.60. The difference in interest rates could hit the euro particularly hard, as it accounts for nearly 58% of the US dollar index basket. Last week's currency movements were driven not only by the rate cut by the European Central Bank, but also by the regulator's plans to go ahead with another rate cut at the December meeting. No surprise that the euro-dollar pair closed the trading week with a drop to 1.0842. Overall, the euro depreciated by more than 3% against the dollar in October. However, as we anticipated, the US dollar, due to being overbought, goes through periodic technical corrections. Nevertheless, the overall market sentiment suggests that the euro will remain under selling pressure and continue its downward trend. For example, today the euro is trading lower within the intraday range of 1.0850 to 1.0874. The main currency pair risks retreating to its 11-week low recorded last Thursday at about 1.0800. At the same time, technical indicators this week still point that the euro-dollar pair remains in the overall bullish trend. If this trend takes hold, the euro will aim to test the resistance around 1.1025. After that, we could see another pullback downward, and today, given the empty macroeconomic calendar, the most likely scenario will be a slow correction in the euro-dollar pair. Currency traders may receive new signals from speeches by representatives of major central banks gathered at the annual economic summit. The event is hosted by the World Bank in tandem with the International Monetary Fund. This summit prefaces the G20 convention. A wide range of issues on the global economy and the central bank policies will be on the agenda. So, unexpected and strong statements or comments from policymakers could trigger market volatility. Notably, this week on October 22 and 24, Russia will host the BRICS summit. A total of 32 country delegations are expected, with 24 of them represented at the head of a state level. Ahead of the forum's opening, it was revealed that the president of Brazil will not attend due to the health reasons. Moreover, concerns are growing regarding the economy of the BRICS group's driving force, the People's Republic of China. Leading Western media are speculating not just about its economic slowdown, but also about the risk of China slipping into recession, if not right away, then likely next year. By the way, the situation with China's economy directly affects commodity prices as well. If demand from the world's largest oil consumer is expected to decline, then prices should also go down. As a result, the oil market is already factoring this into prices, and the benchmark Brent crude is slowly heading towards $70 per barrel. However, the situation could quickly reverse at any moment when some news from the Middle East pops up. Amid the current development of events in the region, the news will hardly be positive. In that case, oil prices would rebound once again. Meanwhile, the Russian currency remains detached from major global trends and primarily reacts to internal factors. The ruble began to strengthen significantly on Friday. The main reason for its growth is that currency liquidity remained available in the market. In other words, concerns about a reduction in the currency supply did not come true. As a result, the ruble will now try to return to the levels it held at the beginning of October. Additionally, the odds are that the Bank of Russia will raise the key interest rate again this Friday, which will locally support the ruble's further strengthening. To sum up, the ruble is likely to follow an uptrend until the end of this week. So that's all for today. We monitor developments in financial markets. Subscribe to our channel and stay up to date with the latest news with us. So see you tomorrow.